I'm often asked about my approach to invest success. I believe it's quite simple, really. It's about being a value investor, not a momentum chaser. When I started out in the investment business back in the 1950s, I was just like many young investors of that era, optimistic, idealistic, and eager to make my mark on the world. I thought I knew it all, and I was convinced that the market was going to move up forever. But that's exactly what happens when you're a young investor. You think the good times will never end. My first few years as an investment advisor were a disaster. I lost money hand over fist, and my clients started to lose confidence in me. But instead of giving up, I took those losses as a lesson. I realized that I had been trying to time the market, which is a fool's errand. Everyone tries to do it, but no one succeeds. So I shifted my focus to what really matters, value. I started looking for companies with strong fundamentals, businesses that were undervalued and poised for long-term growth. I also developed a strict framework for evaluating investments, which has remained largely unchanged over the years. One of the most important principles in my investment approach is the concept of price is what you pay. In other words, if the price of a stock falls below its intrinsic value, it's a buying opportunity. But if the price rises above its intrinsic value, it's a selling opportunity. Another key principle is the power of compounding. I've seen many investors try to make money by taking risks and trying to beat the market through clever investments. But I believe that the best way to achieve long-term success is to focus on consistent returns over time. That's why I always look for companies with strong earnings growth, solid balance sheets, and competitive advantages. Now, I know what you're thinking, Warren, this all sounds very straightforward. And it is, but only if you can stick to your principles. The truth is that investing is not about being a genius or having a magic formula. It's about discipline, patience, and persistence. I've seen many investors who have the talent and the drive to succeed, but they give up too soon because the market doesn't go their way. They become emotional and they start making mistakes. That's when you lose money big time. On the other hand, I've also seen many investors who have the discipline and patience to ride out the ups and downs of the market. They stay focused on their long-term goals, and they avoid making emotional decisions based on short-term fluctuations in the stock price. In my 50 years as an investor, I've made my share of mistakes, but I've also learned from them. And one of the most important lessons I've learned is that success is not just about achieving wealth. It's about building a legacy that will outlast you. That's why I always say it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. It's about having confidence in your investment decisions and being willing to wait for the right opportunities to arise. So if you're an investor looking to build wealth over the long term, I encourage you to take a few lessons from my experience. Focus on value investing, not momentum chasing. Be patient and disciplined, and avoid making emotional decisions based on short-term market fluctuations. And always remember, price is what you pay, and compounding is your best friend. That's my advice, and it's worked for me over the years. I hope it can work for you too.